Bulls run for cover for the second straight day as the sell-off intensifies on Dalal Street. The Sensex tanks below 27,000, the Nifty down over 100 points, the mid-caps under tremendous pressure.
Unitech and JP Group stocks nosedive due to rumours of the companies defaulting on loans. Both firms dismiss the charges, but companies with higher pledge shares take a pounding in trade.
The Maggi soup just got thicker. Health Minister says results of a nationwide test will come in tonight. Delhi issues a 15-day ban, but the Kerala government gives partial relief to the instant noodles after asking government stores to take the 2-minute noodles off the shelves yesterday. The Nestle stock crashes over 9%.
Listed company Vedanta India invests over $300 million to promoter for a 5% stake in Kane India.
With an eye on the upcoming elections, Finance Ministry finalizes a financial package for Bihar and West Bengal's special allocation to be made for agriculture and infrastructure development. That's a CNBC TV 18 exclusive.
The deal pipeline is improving and growth will be in double digits this year, says Infosys CEO Vishal Sikka. Also plans stock options for employees to boost their morale. Stock rises in an otherwise downbeat market.
Also on the show, the weatherman is predicting scanty rainfall this year, but the Met Department's not so enviable track record offers hope for farmers and the government. A special report coming up.
And our special Up South report tonight. Even as legal battle at the Supreme Court looms large, Jayalalitha is banking on more freebies like Amma Canteen, Amma Pharmacy and others to bring her back to power next year.
Come on, come on, come on. Maggie!
Meri Maggie banaye 2 minute mein khushiyan.
I have not received any notice. As soon as I will get it, I will put it up to my lawyers and we will fully cooperate with whatever the law says. I want to also add that, I stopped endorsing Maggie 2 years ago.
मैगी में हमारे जो सैंपल्स फेल हुए हैं, जो भी सैंपल फेल होता है उसका एक प्रोसीजर होता है, उस प्रोसीजर के अनुसार कोर्ट में केस किए जाएंगे।
हमने आदेश दिया है कि इसको जो है NCDRT में जो है तो लिखित कंप्लेंट के रूप में जो है भेज दिया जाए।
हम मंत्री जी से मिले, हमने रिप्रेजेंटेशन दे दिया है, वो रिव्यू करेंगे।
Well, as many state governments test Maggi samples, try and sample this. Goa, Karnataka and Maharashtra have given an initial clean chit to the product. Kerala now has no problem with the noodle, but the taste maker has not been cleared. On the other hand, Delhi has banned Maggi noodles for the next 15 days. The Indian Army has issued an advisory. So is Maggi safe or not? And is the Central Food Regulator the final authority on the matter? Many unanswered questions that we're grappling with. Good evening. Thanks very much for joining us on India Business Hour.
Good evening, Shireen. Are you still eating Maggi?
Well, I wasn't a big one as far as Maggi noodles are concerned, but I think there are several unanswered questions, especially to do with this multiplicity of regulators that we're dealing with, that really this mess needs to be sorted out. But let's talk about the markets, because that is the top story tonight. The sell-off is only intensifying on Dalal Street. The bulls run for cover for the second straight day, and simply put, there was no place to hide. The Sensex tanked over 350 points, falling below the 27,000 mark. The Nifty lost another 100 points, and it moves closer towards the 8,100 level. In fact, it breached that mark in intraday trade today. Mid-cap saw some sharp cuts, with the mid-cap index losing nearly 200 points. In keeping with the equity markets, we're now joined by the managing partner of Pacific Paradigm Advisors, Punita Kumar Sinha. Punita, appreciate you joining us here on CNBC TV 18. Let me begin by asking you what you made of the fall that you saw in the market today. Yesterday, the fall was attributed to some extent and was understandable because of the hawkish commentary that came in from the Reserve Bank of India and the downward revision of the Met Department's monsoon forecast. But the kind of sharp fall that we continue to see today, how would you explain that?
I think I would explain that as a continuation of the fact that, there is no immediate catalyst on the horizon for the markets to be bought into for people who are thinking short term and who have already made quite a bit of profit over the last 1 year. So I think there is some selling potentially to re-enter at lower levels. I do think that longer term and the medium term for India still looks very good for people who believe in the India story. Will probably use this as a buying opportunity. It's hard to say how much the correction will be, but there is obviously profit taking because there's no catalyst and we are entering summer months. There's really no reason for people to jump in knowing that there could be a problem with the monsoon.
Okay, so there's a lack of catalyst and the uncertainty surrounding the monsoon, and that's impacting market sentiment. But let's talk about foreign investors, Punita. A large chunk of the kind of correction that we've seen is on account of foreign investors either deciding to stay out of the Indian markets or pull money out of the Indian markets. There's been all of this talk about how China is pipping India, and it's happened pretty much through 2015. That story is playing out. How would you read the mood of foreign investors given the commentary of the RBI and given the uncertainties around the monsoon and the believability of the kind of recovery that the economy is currently witnessing?
I think long-term investors are still very bullish on India. China seems to have a lot of momentum right now, and quite honestly, it's very hard to tell when that will peter out because valuations are going crazy there in some of the stocks as well. And while the liquidity is very strong, most investors are like holding on. They don't want to be the first ones to be selling because they don't know how much more there is in terms of upside. But frankly, it's not like valuations or the growth prospects of China are any better than India's.
Okay, Punita, you said that long-term investors should look at this correction as levels to re-enter the markets. Would you advise sectoral re-entry, or would you say that it's best to be stock-specific at this point in time?
You know, actually, you have to be very stock-specific at the moment in India because if you look at corporate earnings, most of the companies have disappointed. There have been some few bright spots, but earnings are going to improve and we'll have to wait and see. It's going to be very company specific, and so I think you have to be stock specific, of course keeping in mind that the broader outlook still looks good for consumption oriented themes. It's still the valuations are still in favor and the cycle will turn for the infrastructure in industrial space. So, and then I think financials you cannot ignore. It's a proxy for the growth both in consumer and the pickup in investment cycle. So I think you have to look at all of these sectors, and healthcare of course is a core theme and has always been for India over the last 20 years. But there you have to be very stock specific.
All right, so pick your stocks accurately, Punita. It's always a pleasure speaking with you. Thanks very much for joining us and taking us through what could have led to the kind of selling that we saw in our markets today. Speaking of the market sell-off, the Unitech stock and shares of the JP Group companies were under tremendous pressure in trade today. In fact, the Unitech stock tanking over 35% after rumors of the company defaulting on loans swirled around in the market. JP Group stocks also fell due to similar rumors. Both companies have dismissed these claims, which then saw the stocks sparing some of those losses. Unitech said, and I quote, rumors are being spread by certain segments of the market to profit from trading pertaining to Unitech defaulting on repayments to certain lenders, which are false and misleading. And in a similar statement, the JP Group said, and I quote, we categorically deny all such rumors and wish to allay fears of all shareholders. But even as these companies allayed default fears, many stocks were feeling the heat, with a lot of promoters pledging their shares. Let's sample this. Listed companies raised nearly 2 lakh crore rupees last financial year by pledging their promoter holding as they are strapped for cash. Our research team is here to flag off a few companies where high promoter pledges are a cause for concern, and that reflected in the stock performance this afternoon. Sonia joins us now with her reading of the real estate sector. Varinder and Pragya are also here with us. Sonia, let me start by asking you about the real estate sector in specific, because that seems to be a major cause for concern, isn't it?
Oh yes, I must mention that, none of these companies have defaulted on their loans or anything. It's just that the market was highly apprehensive about companies who have high amount of promoter stake that is pledged in the market. So 3 stocks that took a big beating today. Unitech, at one point the stock was down 48%. It saw a mild amount of recovery but still closed with huge losses. It has a net debt which is 3 times its market cap. So market cap of 200 crores, the net debt of 6,300 crores, and the promoter holds about 45%, out of which 90% of the promoter stake is pledged. Followed by Orbit Corp, a similar case over there. The stock was down about 20-odd% today. It has a net debt which is 7 times that of its market cap, net debt of almost about 760 crores. And here as well, the promoter holds just about 24.7% stake, and 78% of that stake is pledged. DB Realty, it has a 1,400 crore market cap. The debt is relatively better than what its other peers are doing. However, with DB Realty as well, 62% is what the promoter holds, and 85% of that is pledged. So any stock that had high promoter pledge shares was being sold off in trade today. Back to you.
Well, apart from the realty space, if you're talking about high debt, you have to talk about the JP Group, that has a serious problem and has had that problem for roughly about, last 3 to 4 odd years. Talk about this. In JP Associates, while out of the total promoter holding, the entire pledge holding is not that much, just about 0.5% of the total promoter holding. But this company's overall borrowing on a group level stands at a massive 61,285 odd crores. In fact, the FY15 interest outgo for JP Associates was almost about 2.5 times the company's market cap, which now stands at roughly about 3,000 odd crores. But, while things may not look so bad for JP Associates, for its group companies JP Power and JP Infratech, things are looking quite bad. From the entire promoter holding, more than 90% for both of these companies, the entire promoter holding is actually pledged, to the banks. And for both of these companies, while the market cap is just about 1,900 odd crores, the overall leverage position is several times of that. And, a lot of these companies, at least, finding it difficult, at least on a quarterly EBITDA basis, to actually service their interest costs. So that's a big problem. A lot of the banks have actually confirmed that the company is still not in NPA. They are managing to service their interest costs quite comfortably. The company has, of course, taken a massive deleveraging program of, pairing off 22,000 crore worth of assets, which is taken quite positively by the bank, but that problem remains quite huge. Move on to the other group, the ADAG group, in which Reliance Power and Reliance Infra exist. Both of those stocks, the promoter holding as a percent, the pledge holding as a promoter of as a percentage of the total promoter holding stands at roughly about 30% plus. The problem is, for Reliance Infra and Reliance Power, while they have a lot of the projects that are servicing right now, but a lot of them are stuck also, so they have to start servicing those interest obligations, which has led to that massive borrowing figure, as you can see, alongside. GMR Infra, talk about this company. 6,850 crores of market cap, almost about 6 to 7 times is what the borrowing of the company has. They've had to take massive equity dilution to service this. On account of all of this, a lot of these stocks saw some massive selling. But these are not just the only stocks, in terms of the group companies. There were a whole host of other stocks also that the market was punishing in a very, very gruesome way. Varinder has that list for us.
Well, thank you, Pragya. Suzlon, of course, comes on top of my list, where, pledge is a part of promoter holding is nearly 98.5%, and same case what Sonia and Pragya were referring to. Look at that. The total borrowing, long-term and short-term borrowing is nearly 15,000 crores, which is nearly 1.5 times of its market cap. Adani Power nearly 42% pledge. The stock was down nearly 15% at one point of time. Again, in this case, if you just see the total borrowing is nearly 4 times its market cap. Pipavav Defense, interesting story. The stock didn't fall as much, but look at this. Nearly 99.5% of the promoter holding is pledged. Again, you are seeing huge debt over there, nearly 1.2, 1.3 times of its market cap. JSW Energy, the good thing is that the debt, if you just see, is not as bad compared to other companies, but 43% is the pledge over there, so watch out for that. India Cements, again the same story, nearly 76% of the promoter holding is pledged. Market cap is nearly 1.1 times of its, the debt is nearly 1.1 times of its market cap. Also keep an eye on other stocks, where the promoter's pledge is over 90% in most of these cases. Bajaj Hindustan, that stock was down nearly 15-16% at one point of time. 100% of the promoter holding is pledged. Gammon Infra, nearly 95% of promoter holding is pledged. Hubtown, where 92% of the promoter holding is pledged. Lanco Infra, 93.5%. Ratan India Power, nearly 92.5%. So in most of these cases, the common string, what we all three are talking about, is there is high debt, of course, and the pledge, there's a high pledge as well. But one caveat for all of three is that, the pledge does not mean bad in this market. It is important to understand for what reason that pledge is being bought, but that, disclosure is not given on the exchanges. But these are the common factors, what we three pointed it out, which led to massive fall in most of the stocks.
Varinder Bansal is there saying it's not bad for promoters to pledge their shares, and in fact companies coming out with statements today clarifying the rumors were being spread about how they may be defaulting to lenders. Moving on to the Nestle drama, Nestle's Maggi noodles continues to face tough times. The Delhi government has ordered a 15-day ban on the sale of the 2-minute noodles. Even as wait continues for final test reports from various state regulators, retailers like the Future Group have decided to take Maggi off shelves at all their outlets, while the Indian Army has issued an advisory to soldiers. Priya Sheth gets the latest in the Maggi imbroglio.
हेल्थ के साथ जब टेस्ट भी आए पूरी फैमिली मजे से खाए टेस्ट भी हेल्थ भी
India's favorite comfort food is facing uncomfortable times. The Delhi government has decided to ban the instant noodles for 15 days after tests showed that the lead content exceeded permissible limits.
दिल्ली के अंदर फूड अडल्ट्रेशन एक्ट को हम रिवाइज कर रहे हैं. खाने के अंदर मिलावट या दवाइयों के अंदर मिलावट को बिल्कुल बर्दाश्त नहीं किया जाएगा.
Nestle officials present at the meeting with the Delhi Health Minister said they are cooperating with investigations and stand by their claim that Maggi is safe and in compliance with the law.
हम मंत्री जी से मिले, हमने रिप्रेजेंटेशन दे दिया है, वो रिव्यू करेंगे.
Even as test results of other state regulators are awaited, the Union Health Minister says the government will look into the reports sent by state regulators over the next 24 to 48 hours.
केंद्र सरकार ने FSSAI ने एक एडवाइजरी इशू किया और उसमें कहा है कि 1 जून तक सभी स्टेट्स इस मैगी नूडल्स के बारे में अपने अपने यहाँ पर उनकी चेकिंग करें और उसके साथ उसकी जो स्टैंडर्ड्स की सेफ्टी वाला विषय है उस पर वो अपना रिस्पांस हमें दें. कुछ स्टेट्स का रिस्पांस आ चुका है, कुछ स्टेट्स का आना बाकी है. हम प्रयास कर रहे हैं कि जल्द से जल्द उनकी रिपोर्ट आ जाएं. आज शाम या कल सुबेरे हम फिर से बैठेंगे.
The Foods Minister has said the National Consumer Disputes Redressal Commission is also looking into the matter.
आज ही हमने आदेश दिया है कि इसको जो है NCDRC में जो है तुरंत जो है तो लिखित कंप्लेंट के रूप में जो है भेज दिया जाए और भेज दिया गया है. और अब जो है NCDRC जो है नेशनल कंज्यूमर डिस्प्यूट रेड्रेसल कमीशन वो इसका जांच करके और उस पर एक्शन लेगी.
As uncertainty around Maggi's future grows, retailers are taking preemptive action. Retail chains like Big Bazaar, Nilgiris and Easy Day have stopped stocking Maggi till an all clear comes in from the regulator. Even the Indian Army has issued an advisory against Maggi. Mixed results from different state regulators is only adding to the confusion. As of today, the governments of UP and Kerala have ordered Maggi to be taken off shelves from government-run retail outlets, while Delhi has issued a ban. The Gujarat, Maharashtra and Karnataka regulators expect final test results by the end of the week. However, initial tests conducted by Maharashtra and Karnataka regulators have found no evidence of abnormal levels of lead or MSG in the packs. The Goa FDA too has given a clean chit to Maggi noodles.
With Maggi noodles making up about 20 to 25% of Nestle India's sales, the company is facing serious corporate and PR issues. The final decision on this matter will be taken by the Food Safety and Standards Authority of India, which will take into account the reports submitted by the states. But this crisis also highlights the role of the FSSAI, which comes under the Union Health Ministry, and the problems associated with the multiplicity of regulators. In Mumbai, with Kritika Saxena, this is Priya Sheth.
Well, perhaps we will hear from the Union Health Ministry on the state government's reports that are expected to be in by tomorrow on Maggi. Now, listed company Vedanta has spent over $300 million to buy a 5% stake in Kane India from the promoter. Sajid joins us now to explain this transaction. Sajid, what does this really mean?
Vedanta Limited will acquire 4.98% stake in Kane India from its wholly owned subsidiary Twin Star Mauritius. The Vedanta will be paying nearly $315 million or nearly 2012 crores to buy that stake. The stake is valuing Kane India shares at 215 rupees per share as against the current market price of 186 rupees a piece, which means Vedanta Limited is paying roughly around 15% premium for acquiring that 5% stake from Twin Star Mauritius. Vedanta Limited standalone debt stands at nearly 37,000 crores, and it has a cash on the books of nearly 840 crores at the end of March 2015. On a consolidated basis, though, Vedanta Limited has a cash of $7.4 billion. That's primarily in the books of Hindustan Zinc and Kane India. The Twin Star Mauritius, which is a wholly owned arm of Vedanta Limited, will be using this amount to pay its debt, and it has a sizable debt which it it acquired as a result of acquisition of Kane India shares from Kane PLC.
Okay, so we'll have to watch out for those stocks and how the market reacts to this transfer. But Sajid, appreciate you joining us there. This is, of course, a late developing story, news that's broken just a short while ago, so we're still digesting it. Shifting focus to the country's largest bank, State Bank of India. On the one hand, it's facing trouble as far as the merger of its 5 associate banks go, but they also want a change in 3 policies to ensure that that merger can go through. We learned that a management reshuffle is also underway at State Bank. Manasvi Gilani and Ritu Singh join us with those stories. Ritu, coming to you first, tell us about the management reshuffle. The bank is all set to get its first woman CFO, I believe.
Well, women are taking over the world one company at a time, and in this case it is the State Bank of India. What we've picked up from sources, that State Bank of India is all set to announce a woman CFO in the coming few weeks. Of course, these changes in the top tech follow the exit of the SBI Cap CEO, who has now become the new SBI MD, which is Rajneesh Kumar. So there are a few top tech changes that are in the offing at the country's largest bank. We've picked up from sources that PK Gupta, who is the current CFO of State Bank of India, will replace Rajneesh Gupta as the new SBI Cap's Chief Executive Officer, and his place in turn in the State Bank of India will be filled by a lady, Anshala Kant, who is the current DMD of operations. She's all set to take over as the new CFO of the State Bank of India, is what sources in the bank are telling us. Other than that, there's some other changes also that are in the offing. The Stressed Asset Management Group head, PK Malhotra, who's all set to retire come the end of June, his position will also be replaced, will be filled by another DMD who's looking at retail operations currently. So MG Vaidyan will be the new Stressed Asset Management or SAMG Group head, and he will replace Mr. PK Malhotra at the end of June. So a lot of changes coming there and more women coming to power, at least as far as State Bank of India is concerned. We did reach out to the bank for their comments, but they haven't responded to our query.
Here's more to women power at SBI. Manasi, coming to you now. There seems to be some problem for SBI as its plans to merge 5 of its associate banks go with itself. What problem does the Association Bank Union have?
So, first up to clear, there are 3 parties here. One is the SBI Management, one is the SBI Associate Banks Management, and then there's SBI Associate Banks Union. Remember, this is the union. This union particularly that we're talking about is also made of those employees only which are a part of SBI. In fact, today there was a meeting that was held in the morning, and it was headed by the State Bank of Mysore MD, Mr. Sharma. What they're saying is that this meeting tomorrow, this strike tomorrow, is essentially for the policy changes that they require, which are 3 in nature. One is the compassionate appointment policy, which means in case of death of any SBI employee, the son or the husband or the wife should get a job there, which is not happening at this point in time. Second is enhancing the limit of a home loan. They're saying that at this point in time, an SBI employee gets a home loan of about 8 lakhs, while the rest of them get about 20 lakhs. So they want to up that limit and be at least at par with the rest of the banks. Lastly, they need change in policy as far as the carrot progression policy goes, which essentially talks about the leave and the working hours. They're saying that they've been asked to, come during their leave hours. Yes, they're getting compensated, through monetary benefits, but that's not what they're going to do for very long. So, in fact, the meeting that was held today, and when we reached out to SBI on what happened there, they replied to our query saying, today morning SBI and managing directors of associate banks together met the unions of associate banks for a bipartite discussion on few issues, and no conclusion could be arrived in the meeting this morning. So clearly there was no conclusion, and what we understand is that the demonstration strike, let's be very clear, the demonstration strike will happen tomorrow.
All right, Manasvi and Ritu, appreciate you joining us there with those stories. Now, the BJP government at the centre is getting ready to fight elections in the eastern states of Bihar and West Bengal, and elections mean special development packages for these states. CNBC TV 18's Malvika Jain reports that Finance Minister Arun Jaitley has set the ball rolling. Here's that exclusive story.
Finance Minister Arun Jaitley has had a busy day meeting with Agriculture Minister Radha Mohan Singh and former Bihar Deputy Chief Minister Sushil Kumar Modi. CNBC TV 18 learns that these meetings are the stepping stones to what could become a special assistance package for Bengal and Bihar. For the 2 eastern states, this will be along the lines of the special development package given to Andhra Pradesh in February 2015. The government is likely to dip into the 20,000 crore rupee corpus managed by the Niti Aayog for some of the provisions of this package. The government believes such a package will help Bihar and Bengal grow faster by focusing on the development of rail, road, IT, education, agriculture, food processing and infrastructure.
प्रधानमंत्री जी ने कहा है कि आंध्र को जो हमने पैकेज दिया है उसी के तर्ज पर बिहार को भी और बंगाल को देंगे, जिसकी घोषणा अब होगी।
जो पैकेज की आपने बात करी वो किस
आंध्र के तर्ज पर, जिसके कारण वहाँ उद्योग धंधे लगाने वालों को भी सहूलियत होगी और भी क्षेत्रों में अलग से सहायता बिहार और बंगाल को देने का। आंध्र को जिस प्रकार से पैकेज मिला था ना, तेलंगाना अलग बनने के बाद हैदराबाद अलग हुआ, तो उसी प्रकार से बिहार और बंगाल को पैकेज बिल्कुल तुरंत घोषित होने वाला है।
For Bihar, this could be just what the doctor ordered. Remember, Bihar Chief Minister Nitish Kumar has already sought assistance exceeding 1 lakh crore rupees from the centre. He has even said that the award of the 14th Finance Commission will result in a loss of 50,000 crore rupees to the state, which it cannot afford. But more importantly, this could become the cornerstone of the BJP's strategy for the state elections slated for later this year, when for the first time the party hopes to form an independent government. In New Delhi, Malvika Jain.
Financial package being planned for Bihar and West Bengal, keeping elections in mind. For years, the Met Department, India's weatherman, has been the butt of all jokes. Now, to be fair, every country mocks its Met Department, and they don't have the easiest of jobs. This year, private weather forecaster Sky Met is more hopeful of normal monsoon, while the state-owned IMD is painting a gloomy picture. Who's going to win this face-off? We find out that farmers and the government have a glimmer of hope, all thanks to the Met Department's not-so-enviable track record so far. The Indian Met Department's forecast of a deficient monsoon has sent the government, India Inc. and the markets into a tizzy. But private weather forecaster Sky Met maintains its outlook of a normal monsoon, adding to the confusion. An analysis of the past trends show the IMD has a 50% success rate since 1982. One of the worst calls the IMD made was in 2009 when it forecast normal monsoons, but India saw the worst drought in 30 years. The IMD also failed to foresee droughts in 2002 and 2004. The IMD has blamed a worsening of the El Nino conditions for its downward revision to deficient monsoons. But experts say the El Nino doesn't necessarily mean droughts or deficient rains. For instance, 1997 was a strong El Nino year, but India had a surplus monsoon at 102%. While drought years tend to be El Nino years, not all El Nino years are drought years. 2014, for instance, was a drought year, but not an El Nino year. Since 1950, there have been 19 El Ninos, and India received normal or drought-like rainfall in 11 instances, normal rainfall in 7, and excess in 1. Private forecaster and new entrant Sky Met started monsoon forecasts in 2012. While it was a close call for both weather forecasters in 2014, Sky Met's forecasts in 2012 and 2013 have been more accurate. Nomura says, and I quote, "Based on the current forecast, agricultural output will remain weak in the first half of FY16, although year-on-year agricultural GDP growth may still be positive because of base effects from last year. By contrast, while lower agricultural output is a risk to food price inflation, the actual impact will depend on the government's food management policy," unquote. Experts say while risks have increased, the real impact on rural demand and food price inflation will be known closer to July. In New Delhi, Nantara Rai.
Well, a 50% success rate for the IMD. Let's hope 2015 is a year that the IMD does get it wrong. But on that note, it's time for us to wrap up this edition of India Business Hour. We will continue to track the markets. Volatility is expected to be the order of the day. From all of us here, goodbye. Many thanks for watching.